Hi, I'm Kerry with Best of Us Investors. If you've been to my channel before, you know that I spend most of my time talking about my long-term investment plan and how I try to invest in those things that are going to change the way I live. And I play the long game. I invest in what is not going to happen today or tomorrow, but more what's going to happen in the future. And to be honest, that's where I'm comfortable. This actually is going to be a video that I am going to use. It's going to be the first video that I'm going to use in the other area of my investment interest, and that is in real estate investment. The first investment I ever made was, I believe, in probably about 1968. Nita and I bought our first rental property on the Ball State University campus. And so I have a long background history in real estate. And so in this video, as I say, it's going to be the first video in my real estate course. I want to explain that the odds of you succeeding in real estate is very dependent upon you having a plan, much as in success in investing in the stock market. You have to have a plan, you have to have a strategy, and you have to be able to look at that plan when times get tough, like they are in the stock market today, and say, where is the goal? How am I going to get to where I want to go? And what is the plan? So in this video, that's what I'm going to cover. Right after this disclosure here, I'm going to jump right into the first video on our video course.
Best of Us Investors presents Kerry Grinkmeyer.
Real estate has some tremendous advantages over other forms of investing. First of all, it's not valued every day, so you don't have the wild fluctuation. Secondly, it historically always appreciates in value, and thus it appreciates. It has some tax advantages that you can depreciate it. So it has some tremendous opportunities. But what I think is where most people fail is they don't have a plan. They enter the real estate investor race, but they don't know where the finish line is. They haven't established it. So that's what I want to do before we get into the course, is to establish what is your objective and how are you going to achieve that objective, and what are the tools that you're going to need to achieve that objective. Basically, what this course is going to tell you is you need a investor-friendly real estate agent, you need an investor-friendly banker or loan originator, you need a investment-friendly property manager, and then you need money to invest. If you put all four of those things together and you do it properly, it becomes a passive investment, and thus it just generates wealth as well as cash flow, and you accumulate real estate and achieve your goal. But you got to have a plan. If there's anything I've learned in my 77 years of life, if you don't have a plan, if you don't have a goal, you won't achieve it. So I've created a spreadsheet that are actually two spreadsheets. One is one that analyzes the property so that you know if it's going to be a good investment or not. And then the second is to create a 11-year plan that says, if I buy this many homes at this price and they appreciate at this rate, on the 11th year, what will I have? If you'll do that, if you'll follow the plan, and I'll give you the spreadsheet, if you'll follow the plan, you then know where the race is going to take you. And when times get tough, you can always look for the finish line and say, I can endure. I can stay with it because I know where I'm headed. If we have a turn in the overall real estate market and your property doesn't appreciate the way you thought it would, or if in fact it appreciates greater than what you thought it did, you just plug the numbers into your spreadsheet plan and you can see how that changes your goal. When you find yourself in a situation, should I buy a house this year or should I buy 2 houses this year? You can plug that number in and see what the end result is going to be so that you have the fortitude to stay with the plan. Okay, let's go to my computer. Let me share with you two spreadsheets I've created. One is what I call my home analysis sheet, where it's just plug the numbers in. What is the cost? What are you going to pay? What's the mortgage payment? What's the insurance? What's the maintenance fees? What's then the end result? What do I end up in cash flow? What do I end up in tax savings? And how do I go forward? Then, with those numbers, and that is your template as to what you're going to buy, and you merely then take that over and put it into your 10-year plan, and it creates the end goal, the objective that will keep you on track, that will change the numbers from 80% failure rate to 80% success rate. If you know where the finish line is in the race, you have a much better chance of winning that race or even finishing the race than if you don't know where the end is. And that's what happens to most of us. We enter into an endeavor with a blue sky objective, but we don't have a plan. Let's look at the plan. This is the 10-year plan that I was referring to. And there are some assumptions that I've made, but you can, when you get this plan, you can make some variations, such as I've assumed that we're purchasing 1 home per year, and it's valued at $200,000, and it's going to appreciate at a rate of 6%. So at the end of the first year, if we started it on January 1st, that house would be worth $212,000 at the end of the year, and that's what thus the portfolio value is. If then, on the other hand, as I said, we buy a house each year, and for simplicity reasons, I'm assuming it's the same valued house and the same appreciation. You can see how each house appreciates, but cumulatively, your portfolio grows to just shy of $3 million. Now, what is this house that I'm referring to? What I've basically done is used the example that I've used in my class, my real estate training class, is that it's a $200,000 home. Here it is. It's a 4-bedroom, 2-bath, 1520 square feet. It's on the market for $199,000. It needs some work, so we're offering it and we're purchasing it for $180,000. And I've gone through and basically said that you're going to need $22,480 to make this purchase. And that's an element that we're considering in the 10-year plan. So with this purchase, I've broken it down, and I explain this all in the class, and it produces enough to pay the mortgage payment, which is $764 a month. And you can see part of it goes to interest, part of it goes to principal, and it then generates an additional $6,106 of cash flow above and beyond the cost of the house. So with that being considered, I'm then going over to my 10-year plan, and I'm assuming that $22,000 to $24,000 of acquisition cost is going to be paid for in part by the excess cash flow that the house generates, and maybe you are able to generate the balance of it, probably the additional roughly $17,000, $18,000 through other means. Now, let's say that you can't, though. You came up with the first down payment, but you can't come up with one the second. all you do is change that number. If in fact you can't come up with it again on the third year, all you do is change that number and we get the change. Now let's say you get down to year 5, and now because they are generating more cash flow, and maybe because you refinance, you can buy 3 that year. You can see that with this plan, you can dictate as you go exactly, or see if you can do this and that, this is what the results are. What you're looking for is, what is this number? In year 11, what is that number? Because that's what's going to motivate you to move forward. That's what's going to motivate you to see this through and work on it. We know that whatever a human being chooses to do, they have a 20% success ratio. 80% of those who seek to do something fail at it. And that's because they don't have a plan. They don't have that $3,382,530 to look at and say, if I stick to it, that's what can happen. And then come here and say, wow, what if I do get another house there? What is the change in the goal? What is the benefit that I'm going to receive if I can get another house here and another house there? So I believe that whatever your endeavor is, you have to have a plan. You have to have a goal that you have to have a finish line. If you don't have a finish line, the hardship of going through it will make you quit. That's basically it. 80% of people who pursue any endeavor don't reach the end goal because they quit. They drop out of the race. That's whatever you choose to do. So this is the goal, and then this is the supporting document that shows how the numbers all fall into place. This is a part of the real estate course that I'm creating and going to make available. Let's talk a little bit more about that. Okay, does that all make sense to you? Does it make sense that if I can go through Kerry's course and learn how to find my friendly lender, how to find my friendly real estate agent, how to find my friendly property manager, and then where the funds are going to come to fund the purchases and make good purchase? Does that make sense that that's a way you can win? Now, the other thing I'm going to teach you in the course is, how do you announce to the world that you are a real estate investor? This is critical. This is critical. You want everybody that knows you, knows anything about you. You want every real estate agent of any value in the community, any lender in the community, any property manager in the community, that you are a player as an investor in real estate. That is critical. It's the same as, this is a business. This is a business you're creating. Think of it as if it were a restaurant. You want the public to know that you're a restaurateur and your restaurant's open. You need to do the same thing if you're in the real estate investment business, because you don't know who's going to bring you that perfect property, but they can't bring it to you if they don't know you're in the business. That's the leg up I'm going to give you. Besides all where you find your teammates, how you let the world know you're in the business and that you're a source for solving their problem. We've got this house. Mom and Dad died. What are we going to do with it? Well, Kerry's in the rental real estate business. I get it. I know that because he communicates with me on a regular basis. I'm going to give Kerry a call, and maybe then we don't have to get a real estate agent. He can come in, tell us what the house is worth, because he's a successful real estate investor. That's the key to any business, whether it's a YouTube channel, it's a restaurant, It's a rock band. You've got to let the world know that you're available and you're open for business. So that's the last part of the course that I'm going to teach you. I'm going to put it all together through a series of videos, and I'll guarantee you, you'll be successful. Because if you follow the plan, if you have a plan and you follow the plan, you can't help but be successful. All right, let's get into it. You've now seen the first video in my real estate course. If you would like to be notified directly when it is available, go into the link and you'll see a link that says, let me know of the real estate course, and I'll send you a notice when it is up and ready and the details. And I'll tell you what, I'll give you a substantial discount. How's that? How's that? You'll tell me if there's an interest, I'll reward you with a discount. Let's do this. And let's make you a success. I mean, right there, it shows you how you can accumulate $3 million in the next 10 years if you'll just follow the plan.